Hello everyone and welcome back to the Mortgage Administrator online event. This session is going to be talking all things protection processing with UnderwriteMe. UnderwriteMe has brought protection processing into the 21st century with its platform which offers pre-sales underwritten quotes, fully underwritten premiums, buy now prices and benefits, and access to multiple insurers in one place. This session is going to be hosted by Jayne Kohl, who is Key Account Manager at UnderwriteMe. She's worked across insurance and mortgages, having worked at the likes of Guardian Financial Services, Fleet Mortgages, Royal London, AXA, and Swiss Life. If you have any questions, then please submit them on the left-hand side. There is an Ask a Question tab where you can submit your questions, and these will be queued up for the Q&A at the end of this session. So without further ado, I will hand over to Jayne to kickstart this session.
Good morning, everyone, and welcome to this event. And thanks so much for joining us to talk about protection and protection processing. I've got a bit of an introduction, a bit of background about me as well, which I think might help when it comes to what I'm going to talk about today. And what that relates to is the protection market and how it links to the mortgage market. So I've predominantly worked for insurance companies, but what I've also done is worked as a mortgage and protection advisor. So I do understand the arena and some of the hurdles and the problems that occur. Can we move on to the next slide, please? So in terms of the agenda, we're going to spend a little bit of time talking about the value of protection. It's not an easy topic to talk about, and I do appreciate that, but it's absolutely vital for our industry. Then a little bit about the protection platform and UnderwriteMe and what it is that we do. And I suppose overwhelmingly, we need to understand the problems that are there and how certain changes in process can overcome those problems. Then just a touch on consumer duty and how you might follow up with UnderwriteMe's protection platform if you want to. Next slide, please. So in terms of the value of protection, when I was an account manager, and I used to spend most of my time working for insurers, going out seeing mortgage advisors. What I used to find was that some advisors are specialists in mortgages and some advisors are specialists in protection, but very few advisors are specialists in mortgages and protection, because that's not an easy thing to do. Both of those areas are really significant and need a lot of in-depth knowledge. So if you move on to the next slide, please. There was one advisor that I met, and this is not sort of a real philosophical quote. This is not by anybody famous, but it's something that an advisor once said to me that really resonated and really stuck with me. And this was somebody who I considered to be both a mortgage and protection specialist. So as mortgage advisors, we have two objectives. And this is something that this advisor always said to the clients. Both are equally important. The first is to arrange the finance to buy the house. And actually, this is the thing the customer wants, isn't it? This is the thing that the customers knocked on the door for or phoned up the advisor for. The second is to protect your finances so you don't lose your home. Excuse me. And the two words there that are relevant is house and home. Because the finances, the mortgage, buy you the house. And that's important. But once you live in that house and it becomes your home, then how do you protect it? Next slide, please. So there are lots of hurdles in the protection process. It isn't easy. We know that. But is it right to say to a customer, I'm going to arrange the biggest debt that you've ever had, a massive debt, and then I'm going to walk away? And if something goes wrong, if there's anything that affects your health or your ability to earn what you currently earn, don't come back to me, because actually that's not my problem. If you're a mortgage advisor, you are advised to talk to customers about protection and how important protection is. And I can also remember another advisor who said to me, when they talk to their customers about the mortgage and they talk to them about the overall cost of their mortgage, and then they talk to them about protection, if the customer says, I actually haven't got any spare budget for protection, I can't afford protection, then there's a question there. Can you actually afford the house? If you haven't got £50 a month to protect your finances, Should you actually be taking on this debt in the first instance? But in all honesty, the customer does want the house, not the protection, don't they? In most instances, because they think anything that's going to go wrong is not going to go wrong for them. They also think, well, mum and dad lent me the money for the deposit, so if anything goes wrong, I'll go back to them for some money. They think about sick pay. They don't know how much it is or how little it is. And often they delay. Talk to me about this later on. Let me get the house and I'll talk to you about the protection once I've settled in and I've got a little bit more time and maybe I know what my money looks like. And guess what? It never happens then at that point. There's also something to do with processes here. And this is what I think is really important, because most advisors talk to the customer about the mortgage. Can we get you the mortgage? How much is the property? How much deposit have you got? Which lender do we need to talk to? And then at some point later on, they talk to the customer about the protection. And then you do a generic quote for that protection. And they give the customer an idea. We think that we can protect your mortgage in the event of you dying or having a critical illness or being unable to work due to sickness for about £50 a month. So we'll factor that into the budget. And the client says yes. And then we move on with the mortgage. But then at a later date, what happens if the client then discloses a health condition? The problem in our industry for protection, unlike other types of insurance, is that the quotes that advisors give the customer at the start are very generic. Now, if I compare this to something like motor insurance, if you was to use a comparison site to get a quote for your own motor insurance, you're asked a whole lot of questions, aren't you? About you, how many points you've got, where the car's going to be parked, what kind of car is it, has it had any enhancements, that type of thing. And then the quote that you get is specific. You know the premium, you know it's your premium, and you know that that premium is going to be the one that you pay. When advisors do a generic quotation for protection, all they're putting in is the client's age and the cover that they might want. So they give them a premium, but it's actually a ballpark premium, isn't it? So they get a premium, the client thinks it's going to cost a particular thing, but when the advisor goes and asks the full information from the client about their health, they then find out the client is diabetic. So the premium they gave in the first instance actually means nothing. So move on to the next slide, please. Thank you. So the typical quote and apply process for the vast majority of advisors is that they may do a quick quote for the client to give them an indication of the price. And that gives them a list of insurers, and maybe they'll go for the cheapest, maybe they have a favorite, but they may talk to the customer and say, we'll do this, a little bit further down the line. Once we've got your mortgage offer, or once we know we've got an exchange date, then we'll do your protection. But then the client discloses it's got a health condition. And if you're a mortgage specialist and not a protection specialist, you might submit that application to the cheapest insurer on the list. Or maybe you'll phone a couple of insurance companies up to say, my client is diabetic, what do you think? You select the insurer, you submit the application, and the application comes back, that particular insurer saying, actually, we don't cover people who are diabetic, or we will do, but it's going to be twice the price, or we're going to exclude certain health conditions. So that's the process that happens. And by this stage, maybe the client's in the property and they've forgotten why they needed the protection in the first place. Next slide, please. So that's the issue that we set to resolve at UnderwriteMe. Underwriting is about risk and price. So the price you see on a quick comparison is the price for a client who ticks no to all the health questions. And that's a guaranteed price for somebody who says no to all the health questions. So they've got no particular illnesses that will make a difference. They've got no hobbies that will make a difference, no lifestyle choices that will make a difference. Each insurance company has a different set of underwriting rules. And we build underwriting rules engines and we provide those to insurance companies. So each insurer will decide how they're going to price their products and the element of risk that they're prepared to take. Next slide, please. So instead of giving a quick quote, what we do is give an actual specific quote for the client and their health conditions. Because there really is no point saying to somebody, we quite like this particular insurer, especially because they give you access to a private GP or they're giving away Apple Watches. We think they're really good. They've got an element to their contract we really like. And then at a later stage, find out that that client can't have cover with that particular insurer. So what we've been able to do is plug the underwriting rules engines for 8 insurers into our system and give advisors access to that. And what that means is very quickly, a mortgage specialist can become a protection specialist because they've now got access to all the technical information that the underwriters from the insurers have. And they've got that very, very quickly. Next slide, please. So in terms of the insurers that we work with 8. And what that means is that these particular insurers have set their stall out to say that they are accepting a higher than average level of risk for certain health conditions. And the variance between all the insurance companies and how they view different health conditions is vast and it changes constantly. So even those people who are protection only specialists might have a bit of an idea which insurance company they would go to for a particular client who's got, let's say, diabetes or a family history of breast cancer, but they're never absolutely sure because whoever was the best for it last week isn't necessarily the best for it this week. So the insurers that we work with are the ones that see value in underwriting and assessing risk. Next slide, please. So instead of going directly to each insurer to phone them up and say, I'm going to complete one of your application forms for this client, what do you think is going to happen? What we've done is got these 8 insurers to agree to use one application form. So this is the equivalent of having one online submission form for 8 different lenders and them all agreeing to the same question set. So we've got one online submission form and that will allow you to get underwritten terms from these 8 insurers. Next slide, please. So it doesn't have to be a full application submitted. This is the equivalent, and I always bring it back to mortgages, of a dip. Just let's put in a bit of information and see, am I able to get cover for this client? Don't worry about the slide being small and not being able to see the specifics of it. All I'm trying to indicate here is that all I've put in is a BMI risk. I've put in somebody who is a certain height, a certain weight, which is over what would be considered the norm. Yeah, so I think it's 6 foot and 20 stone. So that's over what would be considered the norm. And all the insurers consider that to be a higher risk. So the premium that you might see on a quick quote comparison is not the premium this client is going to pay. So in an initial conversation with the customer, there is no point giving them the quick quote premium. But what you can do is just put very small amounts of information on there, and you will see on the system a crossed out premium, which would be the quick quote premium, and an actual premium here. And you can see there that you can give a very specific premium to that customer. This is what life cover for you is actually going to cost. This is what critical illness for you is actually going to cost. Next slide, please. What we can also do using the protection platform, and this isn't something that you would recognise from a lender point of view, but happens a lot in protection. If a customer needs different types of cover, if they need both, say, life cover and income protection, then you may want to submit an application to 2 different insurers, and you can do that here using the one application form. So you can choose different covers, submit the one application form, and fire it off to those 2 different insurers. Next slide. And that's just showing there that in this instance, we'd be submitting an application. One part of the cover is going to Guardian, another part of the cover is going to LV. And this is actually the only way that you can do that in a really slick and streamlined way. Next slide. So I'm going to look at a couple of case studies, and this is where the underwriting sort of really comes into its own, and something that I've always found quite fascinating. Next slide. So what we've got here is a lady, Laura, who even if you did have a brief conversation with her at the very start of your mortgage and protection interview and say, is your health okay? Are you on any medication? And she would say, no, absolutely fine. In fact, never been ill. It's only when you fill in the full health question that you might find out that Laura has got a family history of breast cancer. In fact, her mum had breast cancer when she was 50. So Laura is going to be one of these people who's actually quite interested in protection and probably very interested in critical illness cover, because her mum had breast cancer when she was 50. We know that breast cancer can be hereditary. So she wants cover that includes it. So what we do is we put that information into the system, and it's not just increases in premiums that are an option for insurers. It's excluding certain health conditions. So what we can see here is that cheapest insurer on that list is Vitality. And if you'd done a quick quote, you would see that Vitality is the cheapest insurer on the list. If you hadn't got the information from the customer about their health, you might have talked to them about Vitality. You might have talked to them about the TV ads and the little dachshund and the fact that they give away Apple Watches. But when you actually go into the system and you put the information about the family history, you can see that Vitality are excluding carcinoma in situ breast cancer from their policy. So that wouldn't suit Laura because she specifically wants cover for breast cancer. Next slide, please. So what the system also then shows you is that some insurers, in this instance, Royal London, slightly more expensive, but are prepared to do this cover on standard terms. And what we get from them is a buy now option rather than a non-standard terms option. So you would be able to see that if you were to watch a demo, you'd be able to see that very clearly. That you can, what you've done is avoided phoning up all the insurers to say, what would you do for this client? What you've been able to do is give your customer actual decisions based on their health condition. Next slide. So this next one is very common. And this is somebody who has got a combination of type 2 diabetes and BMI. So it's not only single health conditions, you can put any number of health conditions in here. And as long as that insurer has got their underwriting rules engines allowing a decision to be made, then we will find it for you. So in this instance, it's all about increasing premium. But some insurers for a BMI of 31 will add more premium on for that. Some insurers are only interested in the type 2 diabetes. And this is a reasonably controlled type 2 diabetes, but it's a really common occurrence because when people are in their early to mid 40s, particularly men, they never go to the doctor, but they get called in to do a general medical checkup, and they get told that the BMI is slightly raised, they're bordering on diabetes, they've got slightly raised blood pressure, and all of a sudden those things are on their medical records. And that makes it very difficult for them to get different types of insurances. Next slide, please. Not just health. This is a lifestyle disclosure. And what we've got here is Mark, who's disclosed absolutely no health questions. So he's answered no to everything. But he has said that 5 years ago, he used to use cocaine once a month. So this could be relevant for drug use. It could be relevant for alcohol. It could be relevant for hobbies or anything like that. And we can see here that we've got most insurers saying we want to write to the customer's GP to find out more. But we've got one insurer, Royal London, who are saying, no, we'll do cover now. Now, I know from when I was a mortgage and protection advisor, I would have spent over an hour phoning up the insurance companies to find out who would cover Mark on this. Maybe I'd be lucky and find out that Royal London did it because I phoned them first. But for my file, for consumer duty and disclosure, I would have had to have put everything on there. So I would have had to have phoned every insurer. And this is a way of demonstrating that. Next slide, please. And then the final one, it relates to occupation. So we've got somebody here who's a self-employed joiner. So no real risk for life cover, but is a risk for income protection. So it might be that you want to send life cover off to one insurer because that's standard rates, no health disclosures, but that insurer isn't necessarily the right one for income protection. And because his risk relates to his occupation, then it would go to a different insurer there. And that's what we've done here. So one application, we've sent the life cover off to one insurer and the income protection off to another. Next slide, please. So I suppose the question then for me is, when do you get information about the client's health? Shouldn't we be getting it a little bit earlier in the conversation? In fact, right at the very start, when we're asking the customer for their ID and their bank statements and their pay slips, at that point, shouldn't we then be asking them for a completed health questionnaire, a generic health questionnaire? Because then we know that if they answer no to all the health questions and we give them this generic quick comparison quote, that's the right quote to give them, because that's the premium they're going to pay. But if it comes back and they disclose information, then there is no point giving them that generic quote, because that's not relevant to them. At that point, we know that something like the protection platform is going to be an awful lot more useful to give them an actual premium. And when we're budgeting for mortgage and protection as a whole, instead of budgeting £50 a month, actually, we need to budget £75 a month for you because of your disclosures. Next slide, please. So just very, very quickly on consumer duty. Next slide. There's always a risk in submitting an application to one insurer. And even if that insurer accepts it with a rating, is that the best that you could have done for that client? And is a client who's got a health condition classed as being a vulnerable client? I think in the past, what's happened is advisors have a particular favourite insurer, and they submit as much as they can to that insurer. And if that insurer comes back with, we want a little bit more money for that client because of their BMI, the advisor will go back to the client, say it isn't £50 a month, it's £60 a month. Is that okay? The client says yes, and that's done. There's another question to ask now. The question is, could you have got that client cover for £50 a month elsewhere? And that's what consumer duty means. Are you sort of taking the extra steps to show that you're looking after your customer? And that's what this system does. So you could go back to them and say, I've got you covered for £60 a month with the insurer that we liked, but I've done the extra research and we could have got it for 50. Now, even if the insurer said, no, I'm happy to pay 60 because I like the Apple Watch or I like whatever, you've got something on your file to prove that you've done that extra research. Next slide, please. And on again. So as far as we're concerned, our system is there to be used in addition to the other systems that you've got. But it perhaps means a change in process. It perhaps means asking the customer those health questions a little bit earlier on in the conversation. To register is free. To use the system is free. The premiums are exactly the same as if you went direct to the insurers. The commission is exactly the same for the advisor. We get paid by the insurer if they get an application via our system. So you use our system to source the best route to get the best terms for your customer and then submit it. And that's the way that we work. But we're there to work in conjunction with the system that you're already using. We're absolutely not there to replace it. And move on to the final slide. So that's the session for today. I think the time is just about right, and we're good for some questions if there are any.
Hello, and thank you so much, Jayne, for that informative session. I feel like I've learned a lot. And so we'll just look at some questions. I suppose one question is, you kind of mentioned that there are 8 insurers. Are there more insurers that might be onboarded onto the platform in the near future?
Not in the near future. We are always talking to other insurers constantly. And the latest one that came on was Guardian. And as I mentioned in my bio, I used to work for Guardian. And I sort of knew that Guardian were never the cheapest, but they had little pockets of health conditions that they would come up for. And so it benefits Guardian to be on our system because all of a sudden they will appear top. The big 2 that are missing, obviously, are Legal & General and Aviva. And we're always talking to them, and it would help us no end if they were on the system, and because they've got great products. But they're not necessarily underwriting specialists. So the ones that we do have certain pockets of health conditions. L&G and Aviva are a bit more general, a bit more price driven, and can we get it through quickly, and less about have we got a bit of leeway for somebody who's got a health condition.
Great. And another question would be is about with the cost of living crisis, do you think that protection, I mean, in a way, protection is could become more important than ever because of the cost of living crisis, because there's less job security, or it just gives you that peace of mind, but people might not have as much money to spend. So don't know if you can speak to that at all.
Yeah, absolutely. You're right. And when I was driving back from holiday last Friday, I was listening to 5 Live, and the whole topic was about the interest rate and people having less money. It's tough. It really is tough. And these days, everybody's base level of standard of living is much higher. So we've all got, I'm guilty of this. Sky TV, Amazon Prime, Netflix, got it all. I've got it all. And if somebody said to me, you're going to have to cut back, I would think long and hard before I cancelled Netflix. I'll be honest with you, and I know that protection companies will always say, oh, you should cancel this and you should keep your protection. That's just not the way that the world works. But if money is tight, then there is no leeway. There's absolutely no leeway at all. And these days, most mortgages are financed by 2 incomes, aren't they? It's no longer one breadwinner and somebody at home. It's 2 incomes maxed out. So without that security, there actually is no safety net. And you know what else helped us a little bit in the protection market was the furlough scheme. Because people understand that furlough scheme there kept their heads above water. And what you're doing here with this type of protection, whether it be critical illness or income protection, you're creating your own furlough scheme. And that's a good way of looking at it.
Yeah. I think that's a really good way of describing it for someone who doesn't really understand what protection actually is. We've had a couple of questions come through on how the commission works. So I don't know if you could,
I can.
A bit, but it's, I suppose, just to flesh it out a bit more.
Okay, absolutely. So the way that our system works is when you register, you give us your agency codes for each of the insurers, or we can go to the insurers and get them. And what that means is if you were to submit a case to Royal London know that case has come via us, but from you. And they will pay you directly. The case appears on the Royal London dashboard. So we don't pay commission. We don't take a cut of the commission. Royal London have just seen this case come from you. And whether you are a network member, whether you're directly authorised and part of a commission club, the commission is exactly the same. So we are just sourcing the terms for your customer and putting that application to the insurer. And then you deal direct with the insurer in the normal way. Hopefully that helps.
Okay. Yeah. And I've got another question here. You mentioned doing a generic health questionnaire from the off. Well, I've got one person asking, is there a generic health questionnaire available on the UnderwriteMe website that they could use? Or
so it's not on the website, but we can certainly get one to you. And what we find is that advisors like to badge up their own health questionnaire. So we can give you the basic question set that we have, which is suitable for these 8 insurers. Obviously, as soon as somebody answers yes, then there's a whole bank in our system of other questions. But common sense will tell you, when were you diagnosed, what medication do you take, that type of thing. Or it could be that once you've got the yes and you know that there's a health condition, you go through it with the customer online. But yeah, we can certainly get a generic health questionnaire to you.
Great. And I think the other question is, do you always get a decision on your system? Or are there instances where they might not be able to source something?
Yeah, there certainly is. So I'll give you really 2 examples. Firstly, if somebody's had a very serious health condition, let's say somebody had a stroke 3 years ago, no insurer is going to be able to ask enough questions of the customer to get a decision. But what you will see is that some insurers will say, we think we'll probably do this at this rating, but we want to write to the doctor, and our system will tell you that. And then there will be others that say, we would never offer cover to somebody who had a stroke a few years ago. So at least you're saving phoning everybody up to say, what do you think? You're not getting your immediate decision. You're getting an idea of premium, but this sort of caveat of submit it, we want to write to the doctor. So it's doing some of the work for you. If somebody had had a stroke in the last 6 months, nobody's going to offer terms and you're going to get a decline everywhere. So it really is for those people who've got the health conditions that are ongoing but controlled, where we can ask enough questions to get a decision.
Great. I think that is all that we have time for. But thank you, Jayne, so much for
That's
that
all right.
informative session. The platform really looks like it's modernized protection processing. And from what you've said, protection will only become more important under Consumer Duty. The next session starts at midday. So make sure you're back by then and go grab yourself a cup of tea and a bite to eat, and we'll hopefully see you then. Thank you so much.
Thanks, everyone. Bye-bye.